Good morning, Chris. How you doing?
I'm good. How are you, my friend?
I'm good. This is Brian Jones. I'm here with Chris Hood, professional options trader and world's most interesting man.
Let me tell you something. World's most interesting man has the world's most interesting driveway today because some poor guy killed a rabbit last night on the road and threw it into my neighbor's driveway. So I'm looking at my road, my road today, and I've got roadkill right over here, which is not the nicest thing to look at in the morning. So world's most interesting driveway. I need to turn my cameras and actually just park them on the outside there. But all good here in Canada. The sun is shining. It's still freezing cold.
When does it get warm? When does it get warm up there?
That's a bit of is that a rhetorical question?
Okay,
No,
so
usually
I visited Iceland a couple of times, and they have at least 2 months of warm weather. So
yeah, we get about 3 days of warmth in around July. That's when you pull out. This is why in Canada we're all very experienced at wearing speedos, and we'll wear speedos and flip-flops when the temperatures go positive. So I mean, the other day I think it was like 3 degrees or something, and I was driving down. I had two sweatsuits. I was dressed to kill. Warmth.
yeah.
Getting rid of the geriatric arthritis. And I was driving down the road, and I came to the stop street down there, and there was this dude in shorts with a vest with flip-flops walking his dog. And I looked at the temperature gauge on the car, and it was like 3 Celsius. And I was like, welcome to Canada.
That's just where you're not a native Canadian. I think you probably.
I'm not built for the cold at all. My wife seems to be fine with it, but me.
I remember in Iceland, it was back about 10 years ago. I went to Gullfoss, which is like one of those big, is basically a big glacial waterfall, like one of the biggest ones in Europe. And I was trying to walk down to the glacier to see the fall, and it was March. I thought March would be warm. I was really, really wrong. And so all this wind was coming up off of the park, and like I couldn't even make it down. I couldn't make it down to see the falls because the wind was coming. Huh?
It was too cold?
Yeah, it was just like I wasn't dressed for it. I took warm clothes, but I didn't realize how cold it was going to get. And then I get back up to the area where there's someone who's working at this thing. There's this girl, and she's wearing a skirt. And I'm like,
I know.
Used to it,
The name Iceland gives it away, right?
That's true. That's
and,
true.
and it's funny you bring up Iceland because the other day I was Googling through my Spotify and I came across that Icelandic band Sigur Rós.
Oh yeah.
I haven't heard them since my son was born, and my son is turning 10 this year. And I pulled it out and I was like, this is it's the most incredible music because this guy that sings for them sounds like a cat that's been stood on. And he's just wailing. I can't work out what he's saying. So there's this one happy song that they have. And I said to my wife, here's the irony of Icelandic music is that this is a happy tune, but he's probably singing about death and destruction. And we just don't know about it.
Well, I've seen them in concert, and they have a really good light show. And the thing, like my ex-wife was really, 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 really big fan, right? So it turns out that they sing in Icelandic, but they sing in their own words. They make their own words up. So it's
they call it Hooplandic or something.
Gibberish.
Yeah. I was reading this article. It says that they sing in a language called Hopelandic. And I was like, man, you guys have got to be stoned out of your mind. Apparently, these guys don't even put music. They just sort of jam together. It's like Icelandic jazz.
Yeah,
and it's fascinating. It's absolutely
you really need to be high to just watch the show. Like the lasers and stuff, the smoke. It's really cool. It's like that.
I think you know what, you've given me an idea of what I'm going to do later this afternoon. After the market closes, I'm definitely not going to be looking at charts while listening to Sigur Rós eating edibles.
Right, and with a fog machine, and you go get a fog machine and one of those light things from Amazon.
The funny thing is, I once traded when I first had an edible. We're only going back a couple of years when they legalized marijuana here in Canada. I took a gummy bear. I'd never had one before in my life, right? I didn't even know what to expect. I was sitting here and I took one, and honestly, I did some amazing trades. Cannot remember them. Okay, cannot remember them for the life of me. But then the next day, I did some crazy, stupid trades. So I can't work out whether the drugs actually helped or didn't. So, you know, I decided I need to be conscious.
Probably best to wait till market close before you.
Yeah. So yeah, don't trade while eating sweets. You know, don't just don't. Yeah, market's really interesting at the moment, eh?
Yeah, looks like it's ready to crash and burn.
I'm gonna show you a couple of charts.
I need to
I was doing I was just going through a couple of things. I mean, I am pretty bearish at the moment. I'll show you why. Here we go. You are going to see some sort of pops and, you know, gaps and stuff like that. That's going to happen, especially after days like we had yesterday and Wednesday last week or whatever. But, you know, let's take a look first at SPY and get some context, right? So SPY, let's see, here it is. This is the 375-minute chart. Now, a day is 390 minutes. I like to use the 375 because that gives me two signals in the day, one at 9:30 in the morning, one at 3:45 in the afternoon. So it gives me time to adjust sort of my trend-based positions. Look at what we have here. So if we go back to the beginning of April, you see this cluster of short signals, the closing of a long, short, and then we had another short, right? So these two together worked as a cluster. You see what happened to the squeeze? See how the squeeze on the 20 length, so this is a 20, 15, 10, and 5. The reason I do that is the 5 feeds the 10 feeds the 15, and the 15 feeds the 20. So I always take signals off the 20, but the 5, 10, and 15 always give me early warnings. They tell me what's coming. Okay, it's almost predictive in a way. So if my 5 is starting to show weakness, that weakness will translate to the 10. The 10 will translate to the 15, the 15 translates to the 20. So if you see squeezes starting to lose momentum there and here, there's a very good chance that this is going to go down in the same direction. You can't have the 20 going up and everything else on the shorter time frames going down. It doesn't work like that. So here you could see on the closure of the long back in April, you see how the squeeze was starting to lose momentum on the 20, the 15, the 10, the 5 had already crossed 0. You see that first cross of 0 over here. So we've been pretty much bearish since the beginning of April, right? Now, a lot of people will trade these extreme movements, right? They go down, oh, it's got to reverse, and it does. And these are hard moves to catch because you sort of get into the mindset of, oh, that's going to continue going that way. And then it fails. And then it continues to operate in this red volatility band. Red, we had that really bizarre volatility band increase here to green on Wednesday last week, which was then reversed with a little bit of interest as well on Thursday, and then Friday we continue going down. Now here's the key: you can't be bullish on SPY until we get back above 410. All right, that's the first stop. Until we get there, you have to trade to the short side. You've got all your squeezes firing short, one, the 20, the 10, the 15, the 10, and the 5. All of them are pointing down. So by default, we know that whenever these are aligned in the same direction, they tend to go in that direction. So we know that the movement is going to go this way. Now, where is it going to go? I was writing an article yesterday of, are we at the bottom? Is this the bottom? And the truth of the matter is, no one actually knows. No one knows. Everyone's going to come out with a view. It's going to go here. It's going to go here. It's going to go here. Don't trade like that. Rather trade what you see. What you see here are squeezes firing to the short side. We are trading towards the middle of a volatility band. So you see that's the high. There's the middle. Here's the low. The problem that you have when you trade in this no man's land is direction. So we could see a pop up, which we're going to see today, but we could go here and then fail. We could go here to the top, to the high of yesterday and fail because these squeezes are telling us to the downside. So it's very, very difficult for anyone to take a longer than 1 day view that's bullish, because you can't be bullish until you get past there. Once you get there, if these are still bearish, you can't really go long until you pass the 21. So really 416 is going to be your trigger. Now, if you get to 416 and these are still bearish, you've got a short from there. And if you've got 416 and you're bullish, you've got to really wait until you get above this blue zone.
So
right?
416 is the top layer of that green band.
Yeah, so 416 is the outside of this support zone here, this green zone. Once we get past there and we're on the 21, we want to be 2 closes above the 21 to trade that way. 1 close below the 21, we're going to go that way. So you've got to be careful about how you position yourself. For me personally, I trust the squeeze. So if the squeeze is telling me, you know what, this is going to be going to the downside, when a squeeze fires, like we have here with that triangle, we can expect 6 to 10 bars of downward momentum or directional momentum. So we've only had 2. So now we can expect at least 4 days or 4 candles, which would be at least 2 days of downward price. So I don't really mind if we open here, that's fine. What we should see during the day is a wide candle forming, probably coming down to this side here. This move up here is not unusual considering this hammer candle that we had yesterday, right? We closed near the high of yesterday. We didn't see any buying in the aftermarket, so no one was going in and making big adjustments on their book. So this is normal, all right? This is normal, but I would probably not bet against the stochastic and the squeeze going to the short side. So there's the bias, right? My bias is to the downside. I don't think we're going to be going up until we get past these levels, right? So those are our triggers for bullish trade. Let's look at a couple of stocks that have really just, you know, I hate using the expression, but they've crapped the bed and they've fallen, right? So let's have a look. First one, let's look at Peloton. Most people remember this as being a darling of the whole internet, you know, COVID thing. Let's have a look at where Peloton has gone over the last year. This stock, let's not forget, was trading up here at around 180, you know, 174, 172.33. And look at it today, $12. That is just value destruction at its peak, right? When did we get the signal to get out? That was on the 22nd of February last year. We haven't really traded this since last year because it's just been going down. That would have been a great short trade if we'd done it. Let's look at UPST, another one. This was trading up at $400 in October last year. Today, 32.
What does Upstart do?
They do credits. It's an AI platform for startup businesses.
Okay.
You know, technology innovation, et cetera, et cetera, et cetera. I mean, I don't know. I don't really know what to make of all of these sort of innovative stocks that are just getting completely hammered. I mean, is it a function of their business model being wrong, or is it their funding? You know, because you have to put some context into what they do, right? Like, innovation will change the world, but these guys are just getting hammered. It's crazy. Have a look at this. Is sort of like, how do you assess innovation and all these high beta growth stocks, right? Look at that. This was up to $160. Red vol band, bang. Look at that, down to 42 today. These vol bands are so critical in terms of how you trade. Let's look at Netflix. Since our friend Bill Ackman lost 400 million, you know, could have avoided that, Bill. I hope he's watching. I don't think he's a subscriber. I don't think he's clicked like on anything I've said. But that would have saved 400 million if he had had the same approach. So this is it's an interesting, you know, part of financial history that we're in. You know, a lot of people, a lot of traders haven't traded these kind of markets before. And it comes down to trading what you see, not what you think. It's really important not to trade what you think. If you think that there's a bottom now in the market, and a lot of people will come in this morning, they're going to see the SPY gapping up, and they're going to go, that's it, there's the bottom, and we could be falling. You know, could we go down here? It's unlikely. You know, I don't think we're going to get as low as that if we just add on some Fibonacci stuff. You know, could we go down to 349? Yes, it is possible. How long it takes us to get there, not sure. No one knows. You know, I was writing on Friday that we would break 400 by Wednesday. You know, we got it yesterday. So we got the move. It's just now a question of positioning correctly. I'm definitely positioned to the downside. I will switch my bias when we trigger on those levels. But until those levels are broken, there's no reason to be going long in this market. It's just not worth the risk. The risk reward is just not there on the long side. And I'll show you a couple of other stocks that look pretty.
I noticed that, I mean, we really haven't had a bear market in a long time.
Yeah.
I mean, do you think this is still, I mean, this is obviously speculative, but do you think this is maybe the bear market started over here with the pandemic, and then we're just now seeing the fallout from that pandemic, because maybe that run up was a prop up of the Fed?
I think a lot of it was liquidity driven, right? A lot of the previous rallies that we've had in the market, you know, if you look here at 2008, that was a pretty big move to the downside. 2008, 2009. We had this little one here. We had this little one here. We had this little one here. This was COVID.
Mm-hmm.
You know, but this is a liquidity fueled sort of increase, right? This is when the Fed was just pumping huge amounts of money into the market, and at some point the money has to go. You kind of, you know, think of this, if you're only producing 100 widgets and you've got 100 notes in circulation, each widget will cost $100, right? But if I keep my production the same and I start increasing the amount of paper money, right? So now suddenly I put in 1,000 widgets and I still only produce 100, or sorry, I put in $1,000 and I only still produce 100 widgets. Those widgets are going to cost 10 cents because it's supply and demand. So when you start looking at the amount of money chasing the same amount of economic output, that's how inflation gets created. It's not that we are, our productivity hasn't increased. You know, when you start looking at the stock market, you've only got a certain number of stocks, right? So think about things like Apple and Tesla and all of them. We're not creating more Apples and more Teslas. We've still got the same, right? And now we've got more money chasing the same amount of shares. And that's what creates this artificial demand. So, you know, for me, you know, it's a matter of if the person who's producing all of this money suddenly starts to withdraw that liquidity from the market, the asset prices will need to fall to adjust to the amount of paper supply, right? The money supply, that's what happens. That could lead in some cases where those assets are finite, like gold and things like that, start to become a little bit more valuable when money starts going out of the market, because there's only so much gold, right? So I don't know. I think that where we're going to land up and where we'll start to see a recovery might be, sorry, I have a crypto order that's going on. Once we have the sort of removal of this liquidity and people start to normalize themselves into this hyperinflationary environment. When I say hyper, I mean it, you know, loosely. I think that the market will stabilize. At the moment, you know, inflation is not bad for stocks. You know, people tend to think that it's bad for stocks. It's bad for some, not all. You know, there's some stocks that do very well in inflationary times, especially where businesses can pass those costs on. So, you know, when it comes to trading, I'm not a fundamental trader by any means. You know, you can't use the word fundamental with me, because I just don't think a lot of robots that create liquidity in the market trade off fundamentals. They trade off patterns and they trade off technical signals. So I think we're going to have to wait and see. It's a question of setting your levels correctly and being patient. Patience will pay off more in this market than any other time. Because when your setup is good and you trade the setup, you'll make money. If you're impatient and you push things and you start to say, but it must do this and it must do that, because I read in this textbook from 2009, you know, and this is what people do, is that they become so married to these ideas that those ideas are sometimes invalid. They just don't know how to prove them. So, you know, I have some clients that are very committed to certain triggers that they use. You know, I only trade the 920 SMA cross. Okay, but do you realize that it doesn't work the way that you intend it to work on every stock. It works with some stocks and not with others. Every stock's personality is different. And if you're not doing that, your success it's not blind success, it's just fragile. You could land up in a situation where you're winning, but you're winning despite the fact that what you're using to trade is not necessarily good. So, to cut a long story short, I don't have a clue where this is going to end. I don't think anyone does.
Right.
It would be a fool's game to try and predict it. But trade what you see, not what you think. If you keep that in mind, you're not going to be getting stuck on a bias. If the price reverses and it hits those levels, I close my short trades. I move to the other side. I'm not committed to one angle. I try and keep things in perspective.
Those are good thoughts on that. Do you think so? Right now, you see definitely more downside.
Yeah, I think that we're headed to lower lows. Let's take the daily chart, for example. If we just open this up a little bit, the SPY is going to have to do a lot of work to get back into a sort of green volatility band up here. There's a lot of resistance here, right? Red, you've got these layers here that it needs to get through. Let me just take some of this off so it looks a little less busy. This is where it needs to get to. The easy trades are always going to be in white zones, right? So the easy trade here is this big white zone to the downside. And I've got oscillator support down here at the bottom. My squeezes are all sort of negative. My stochastics are all negative. So I have very little green here to tell me that this move, whatever this move may be, will be sustained to the upside. I have no indicators telling me that this is going to be a sustained move. But the easy move is here, or the easy trade will be above 434. There's the white zone here. So for novice traders, taking an entry at the 21 or at the top of the vol band or inside these green zones, you could do it, but it will require work, right? So if you've got to go to a job and you're putting in these trades, realize that anything where there's this color, it's not going to be an easy trade at all. It's going to require some hands-on management. So, I would be looking for a break above 434. That would open up a trade potentially to 448. This may or may not be a strong level of resistance, depending on what the oscillators are saying at the time we get there. But then there's this nice trade from 450 up to 470, and then from 480 up. Those are the trades that we're waiting for to the long side. To the downside, where we are here, the next level, 376. If we can get down to 376, we'll take profits. We've already got a profits line here that we'll take some money there if we can get it. And then we'll reset the trade to the downside. And then a break of 368 will open up 340. So that's how we trade. We just trade the little green, the white areas, avoid the colors if you can. There are a couple of sectors that look, or a couple of stocks that look pretty weak at the moment. The first one is NVIDIA. NVIDIA triggered some short trades yesterday. There you can see we have two short trades triggering there. Squeezes are just starting to fire to the south. And we've got a reasonable amount of white space on the trade. So this one could be a call credit spread, probably selling the 200 somewhere around here, or the 195 to the short side. The other one that we looked at, or that I may do this week today, is Tesla, also triggering a short trade yesterday, 345. Now it opens up this morning, and that's fine. But look at these squeezes, short, 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 short. It's like, let's see where this goes. If it goes up, can get above 843 in the next, so by 11 o'clock, 12 o'clock this morning, then obviously this will start moving that way. We'd have to wait to trade this to the long side. We'll see what happens to the squeeze. But if this falls in the first hour or so of trading, you've got to trade down to 736 that you could use the bottom of the vol band. So we got NVIDIA, we got Tesla, John Deere is the other one. Here also triggered a short trade yesterday at 3:45. Short, middling. But I wouldn't be too concerned about the 5. I would be more concerned about the 15s and the 10s. These two have a much higher impact on the 20. Short can come down to 350, possibly down to 343. So there are at least 3 decent trade setups that we have at the moment on the short side.
What about the long trades? I mean, I know something's always going up.
Yeah, so long trades, SQQQ.
I know I'm in UUP. I keep.
Yep, UUP, definitely a good one. Strengthen the dollar. You know, that doesn't look like a trade that's going down by any means. You've got a squeeze on the 10 that's fired north. You've got a potential squeeze firing north on the 15. That will probably lead to a refiring of the squeeze on the 20. So any pullback to the 21, I use as an opportunity to add to a continued dollar strength. The other ones worth looking at are, you know, if you want to be short the Nasdaq, you can short Nasdaq or you can go long PSQ. So PSQ is basically short Nasdaq. All right. So if this is going up, Nasdaq's going down. Right. So look at your squeezes at the bottom. You've got the 10s and the 15s, and you've got a refiring of the 20 to the upside. Squeeze signals, it's moving up. So what we want to do is we want to use this vol band to build our position. We're going to use it probably up to 1433, take profits, wait for it to get about 1453 and then re-enter. And then we've got this big trade that we could do up to 16. I have a position in that and like a bear put on SQQQ. Yeah, a bear put on SQQQ? A bear put. So you want SQQQ to go down? I mean, I'm sorry. I've got a bull call on SQQQ. Sorry. Bull call. Yeah, this one would work. Obviously, you've got other ones worth looking at as well. So this is another trade we have in play, which is RLI, insurance company. Here we've got long triggers, squeeze going to the upside on the 20, squeeze on the 15, squeeze on the 10, squeeze on the 5. This one's going up. Had a great earnings, really did well on earnings, pulled back to the 21. We had a small short trade over here and then back into the long trade. Squeezes going north. We've got a profit target up here at about 124. So this one looks good for the long side. I like the look of the energy complex. I know it looks a little weird right now because of this big red candle, but you know, it's important to remember energy's role in inflation. So we are expecting some lower prices here on the 5 and the 10 and the 15. You can see that the squeezes are losing momentum. So what we will be looking for over the next sort of day or so is to see some consolidation in this white zone, possibly a break through these areas. So we've already got some triggers up there. So at 80.22, we'll be going long in energy. You know, we're just waiting for that setup to reappear. A close above 80.22 would get us back into energy. Moderna looked a little weak as well. So here you can see we've got a short trade on Moderna, squeeze firing south, 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 south. And we're in this gray zone, which obviously the price when it's in a support or resistance zone, it's going to be gray. Here, we're looking for the price to drop down into this green. If it can fall through the green, come down here, that would be what we're looking for. And we've got some pretty decent signals that have triggered here. So that signal alone historically has around a 56% win rate with a profit factor of 2. So what that tells us is the amplitude of the move once we get these signals tend to be fairly big. So a long call option or a bear call spread quite wide, 30 delta, that would probably be the trade of choice.
Moderna, just a question on Moderna. How heavily is that weighted in Labu and Lab D?
Well, Labu and Lab B, Labu is a triple index, so it's triple XBI, right? XBI. So if you look at IBB and XBI, the weightings will be slightly different. One of them operates on a cap weighted basis. The other one works on a price weighted basis, I think it is. I can't remember which one is which, but XBI tends to be the one I trade the most. IBB tends to be slightly less liquid. But with biotech, you know, when you look at biotech as a whole, sometimes it's a little easier to actually get the right stocks as opposed to trading the index. You know, the index, because there's so many in the index, you miss out on the impact of one of these big moves, right? So rather than doing that, it's probably easier just to actually get the right stock. So we do quite a bit of biotech research as well, and we'll trade some of the biotech stocks too, but they haven't had a good time lately. You know, back here in April, there was the sell signal on IBB. If you look at XBI, you know, a similar kind of chart. You know, it's just a sell-off that started and you know, a waterfall. I wouldn't want to be trading Labu until XBI becomes bullish. You know, you really have to trade the underlying and then use the triple leverage if the underlying is moving up. You know, rather than trading the triple leverage by itself. The triple leverage by itself, because of the way that they reset each day, it becomes a slightly harder trade. Here, you know, you're still trading that signal. So the signal from April to the short side. You know, let's have a look at the squeeze. You know, here you've got a new short signal triggering back here on Thursday, or sorry, Friday. So that would have been a fairly decent trade. That would have generated a 3/4 to the short side. And this is what we like to do. At 3/4, I generally go through, look at the trades, what's triggering a signal, and then use the last 15 minutes of the day to position, you know, what I want to trade. You know, sometimes the easier trades are just the indexes themselves, SPY and QQQ, rather than trying to trade individual stocks per se. I don't like the gap up risk at the moment. There's just too much gap up, gap down risk. But this one, XBI, you know, you can trade that one to the short side. Let's look at Home Builders, was another one that I was looking at yesterday. Here you have a short trigger at 3/4. Look at that. 1, 2, 3, 4. It's all looking down. Here I needed to get below this green line, 59. It's got to break that green line. As long as it's in this green, there's a potential of it just to bounce. So you want to stay out of that. Industrials pop up this morning. Again, short trigger, bottom of a vol band with a divergent low bar. That divergent low bar could reverse. So the trade here would be wait till it gets to the 21. If it gets to 21 and you have squeezes firing to the short side, there's a short play back down to the top of that 93 level. Healthcare. Here we go. There was a short trigger at 9:30 yesterday. There's where we ended the day yesterday. We're going to have a little bit of an open underneath this green zone. Short side squeezes. This will probably pop up, come back down. Let's have a look at GDX. We have a short trade on here at the moment. This one was taken back here. We took it on the close of the long. This one we shorted. I think we're up GDX 60% on this trade. And we're down here into this gray zone. Squeeze firing short, 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 short. We're looking for it. We've got take profits here at 32.11, and we can add at 31.63. So that's currently what we have on at the moment. I'm watching XOP for a reversal here once we get back up to these levels. I'm looking at energy. I'm looking at CVX. I closed a CVX trade the other day. We had to close the long on that signal. I'm waiting for these to come around. We did 2 short trades on AA over the last 2 weeks where we got doubles in both. Starting from here on that divergent high, we traded twice for doubles on that. Oxy, hopefully we get back to 59. Yeah, it's going to be back up above 59. So we've got a credit spread on this one as well. You know, there's not much that looks good. XLC, a short trade on XLC. So we've got a bull call spread, a long duration bull call spread, and a hedge. We put on a bear put spread as well, and we've adjusted the delta to turn it into a negative delta trade on the back of that short trade signal that we have there from yesterday. So, you know, the thing is, the market, you've got to be a bit flexible. You know, you're not going to have the same kind of trade strategies that work in an up market don't work in this market. Don't be doing anything cash secured. Don't pick a level. The worst thing you can do right now is pick a bottom. By saying this stock is not going to go below this. Don't do that. If you do that, you're setting yourself up to fail.
Are you being a little more conservative with your profit taking in this?
Absolutely. Trading to the short side, you need to do two things. One, take profit when you get the 50%. On long markets, when I'm going to the other side, I might go 70%, 80%, 100%. But in the short side, it's the 50. The reason is the reversals kill you. The reversals will take a strong winning trade and turn it into a loser very quickly. So you've got to be fast. You've got to be a little bit flexible. You also need to adjust your volatility tolerance, because if you don't follow, or you shouldn't really look at the market in the same way, long and short. It doesn't work. If you look at the mathematics behind trading in both directions, often traders that trade in one direction only, long only, tend to do better than traders who try and trade both sides. So as soon as you start adding that short trade in, when you've been trading long only, and you use the same measures, the same ATRs and same sort of volatility measures on the short side as you did on the long side, you can take away all the gains you made on the long side by giving it back on badly managed short side trades. So always remember, short trading, market going down, you have to do it a little differently. It's not the inverse of a long, definitely not. And that's just mathematical. It's because when you have these reversals of strong moves to the downside, they tend to be huge and they're so fast, they can wipe trades out. So be careful on that side. It's really important to remember that. But there's opportunity, right? It's just a matter of what you think is an opportunity. So you've always got to know what you're looking for, wait for the signal, trade the signal. Don't trade a bias. Don't trade your opinion. I have no opinion. This is telling me XLC is going down. I don't care if XLC goes down or up. I just follow what it tells me to do. I call trading sometimes a game that, there was a thing about monkeys throwing darts at a board many years ago.
Right.
Trading can be a little bit like that. You've got to get to that mind space. Trading is not about intelligence. Smart people don't always make good traders. So, just because you win on a trade doesn't mean you're clever. Just because you lose on a trade doesn't mean you're stupid. Sometimes it's just a question of controlling your emotions and not being greedy. Those are things that aren't intelligence-based. Those are learnable skills. So be very sensitive to how your emotions play out when markets are down, markets are up. Did you have, when you greet your wife or your spouse or other at the end of the day and you go, wow, the market was up? Or do you go, market was up? Did you go, wow, the market was down, or the market was down? You've got to remember that emotional translation into how you manage your trades, really important. But, a lot of times these false gurus that sit around bragging about Lamborghinis and things like that don't necessarily tell you about that stuff. They just think that the trade is more important than how you manage it. No, how you manage it's more important than the trade. Any chicken can throw a dart on a board and come up with a good trade. I mean, that's not hard. What's hard is making your decision to enter, exit, and all of that emotionally flatline. That's the most important thing. And if you can't get to that state, don't play with real money. Just sit on the side and practice before you go into it. You don't see anyone who picks up a tennis racket at the superstore on a Saturday go and win Wimbledon the next week, right? They've got to practice first. So practice makes perfect. All right, my friend. Have a good day.
You too, Chris. It's been great chatting with you this morning. Go check out Chris's products, Alpha Hunters, at Rogue Investing /alpha, and get on board with us. So, all right, I will talk to you next week, Chris. Have a good day, good weekend.
You too, my friend. Take it easy.
All right, see ya.
Cheers.